Bloomberg Audio Studios. Podcasts, radio, news.
Investors woke up this morning to seismic losses for U.S. tech stocks.
Just creating a massive drag, hundreds of billions of dollars in market cap loss.
The Nasdaq fell as much as 5.2% in overnight trading.
As Nasdaq futures and global tech stocks extend their losses on fears the AI race may no longer be America's to lose.
By the close of a wild trading day, Nvidia's stock fell by 17%. The chipmaker saw $589 billion erased from its market valuation, breaking its own record for the biggest single-day loss of market value on the U.S. stock exchange. And energy firms expected to profit from AI demand sank too, led by a 21% drop in the share price of Constellation Energy Corp.
This is a really stunning development, kind of coming out of nowhere for the AI world.
This stunning development came in the form of a new AI competitor, a Chinese company called DeepSeek. Jackie Davalos, who covers artificial intelligence for Bloomberg, says DeepSeek has disrupted the AI world by building a model that rivals its competitors using a lot fewer resources.
Tech companies spend billions of dollars at this point on training their AI models. And you had Meta last week saying that it would spend upwards of $65 billion this year on AI development. So it's a lot of money.
DeepSeek claims it spent closer to $6 million to train its most recent model. And it's made its system open source, meaning anyone can access its code and build on it. In a matter of days, the company's chatbot, which functions similarly to ChatGPT, has rocketed to the top of App Store charts. And its sudden dominance has some investors questioning the strategies and the valuations of the U.S. tech companies that are developing AI and the technology that powers it.
And I think DeepSeek is now putting a really big focus on what can you come up with in the short term, or are we just wasting our money here?
This is The Big Take from Bloomberg News. I'm Sarah Holder. Today on the show, the rise of DeepSeek, how it could upend the U.S. AI industry's competitive advantage or push it to innovate. It's not what DeepSeek does that's so revolutionary. Functionally, it's actually very similar to a lot of other AI chatbots.
Yeah, it's a large language model that can handle reasoning, and you can put in a question, it gives you an answer. Anyone can go to the App Store and download it. If you're a student looking for help on your essay, or if you're a researcher looking to help on your PhD dissertation, the same people that kind of go to a ChatGPT or an Anthropic's Claude or a Google Gemini, it's general purpose. And what you're also going to start seeing is the coding community really delve into this. They're kind of one of the bigger cohorts that are early adopters of this because it is so crucial for coding. It takes a lot of the mundane tasks from coding out of the picture.
Why was DeepSeek's rise seemingly such a surprise to so many people?
Part of the surprise was that this startup sort of came out of nowhere. It was founded in 2023 by a guy that used to run a hedge fund, and it was kind of this spin out of this hedge fund. And it really didn't come onto the scene until this year when it released this model that when it performed on benchmarks, it was pretty comparable to what we've seen out of OpenAI, Anthropic, and other leading models. And so part of the surprise was, how are they able to do this so quickly? And once we started seeing reports that not only was it faster, but it was actually done at a fraction of the cost. Remember, it's taken billions of dollars for these huge AI companies to build and train and release these AI models that power the chatbots that we all play around with.
DeepSeek has said it spent only $5.6 million to train its latest AI model, though it also cautioned that that figure didn't include all their costs. And since it needs less computing power, it could have significantly lower energy needs. How did this young startup develop this product so cheaply?
Well, part of it has to do with its roots as coming out of this quantitative hedge fund. So it has this deep knowledge in this computational framework. And not to get too into the weeds, but DeepSeek has focused on what it calls maximizing software-driven optimization. Basically, what it's able to do is create an architecture that ran more efficiently, that didn't need these really intensive chips that are essential for the models that run OpenAI and Google and Meta's Llama. And it did this because there's been export controls on chips going to China to prevent fresh AI startups from coming about and challenging U.S. dominance. And so what we saw DeepSeek do is kind of get around these export controls by focusing its models to run in a different way, kind of in a different sort of architecture. And NVIDIA's H100s obviously have propelled the company to new heights, but those are really expensive. So the fact that DeepSeek doesn't have to rely as much on them kind of takes a huge chunk of that cost out.
When was DeepSeek released, and then when did it start getting so popular?
DeepSeek was founded in 2023, but we really started to see it make a splash in the AI world when it released a report that outlined its performance against other AI companies.
What stood out to investors in those reports?
It performed really well. So its latest model reasoning capabilities were similar to that of ChatGPT. DeepSeek also said that it's better at various tasks, including coding and math. And ChatGPT is sort of this leader in conversational AI. It's pretty versatile. But DeepSeek really targets more specific application that developers might be looking for that are more customized and cost-effective. You still lack some of that, polish. It's not as polished as you might see a ChatGPT, but in terms of its speed and just the way that it's able to handle a complex question or query is really surprising given, this company was just founded about a year ago.
So when DeepSeek rose to the top of the app charts, when it released this information showing how it worked, how it's performing, it had this seismic impact on U.S. markets. What do experts think about the market reaction? Was it overblown, appropriate?
I think you're seeing some market experts issue an I told you so, that there was reason to doubt that so many billions being poured into the space was justified. You also have other experts kind of saying, hold up, let's wait and see what this startup is all about. We need to look under the hood. These are just the first initial days of getting to compare what DeepSeek's model does, how much more runway it has to go as well. If you remember, the early days of ChatGPT felt like we've never seen anything like it before. And so I do think people are still trying to wrap their heads around how good is this model.
They're also trying to figure out whether DeepSeek's reports of lower costs and greater efficiency are as impressive as they initially seem.
You look at the other AI companies, OpenAI and Meta and Google, their models take a longer time to come out. They're big tech giants. They're naturally going to move a little bit slower when it comes to releasing their technology to the billions of people it has captive already. And that's the benefit of being a small startup, that you get to release things quicker and make a big splash. But whether that splash really has legs, whether it lasts, is still yet to be seen. And I think that's what, many people in the AI field are, wondering about.
On January 24th, DeepSeek got a high-profile nod of approval when Mark Andreessen posted on X that the company's latest version is, quote, one of the most amazing and impressive breakthroughs he's ever seen.
Once he tweeted that coming from a tech titan like himself, he is very familiar with the AI space. His firm, Andreessen Horowitz, is a big investor in AI companies. And so kind of getting his shock and awe at how good this DeepSeek model was, I think sent further reverberations throughout the market.
Coming up, what does the emergence of this Chinese firm mean for U.S. dominance in artificial intelligence? And could DeepSeek's ultra-low-cost model put pressure on soaring American AI budgets? The U.S. has been a clear leader in the artificial intelligence space, a position it's tried to protect by restricting the sale of AI chips and technology abroad. So I asked Bloomberg's Jackie Davalos how American policymakers might react to the China-based DeepSeek's rise.
I think it's an opportunity for people to take a step back and evaluate kind of where we are now, what it's taken, the level of investment, and ultimately what people want to see going forward. A lot of the attention right now, especially going into this new administration with President Trump, has been around national competitiveness against adversaries like China. And it really is shocking when you consider the fact that the U.S. has done a lot of work to make sure it can restrict the supply of these high-powered chips to China, citing these national security concerns. And then you have DeepSeek coming onto the scene, which means that they were able to achieve this low-cost model without relying on these high-powered chips. So clearly there was a workaround here that the AI community missed, but also the U.S. missed.
Well, right. The fact that DeepSeek was developed so cheaply for millions, not billions, what kind of pressure does that put on U.S. companies and their spending? Are they going to try and adopt any of the strategies that DeepSeek used to bring those costs down?
That's an open question because we've already seen a lot of concern about the supply of chips. Are we getting enough? Are we getting them fast enough? Who are they going to? NVIDIA's coming out with new models, and you have NVIDIA competitors coming out with new models. And so this DeepSeek development really raises the question of, well, wait a second, do we need this many chips to begin with? You might see AI companies get more creative in how they're building these models, perhaps changing up their architecture and framework. You might see investors starting to perhaps dole out less money and demand that, they find other cheaper ways to make this. So I think it's all going to start kind of coming together with a bit more urgency now that we know that clearly this Chinese competitor is giving U.S. companies a run for their money.
Could this be good news for the AI industry overall if it pushes this kind of innovation and investment? Or does it feel like more of a threat?
I think it depends on who you are. If you're the U.S. government, this definitely feels more like a threat. If you are an innovator who is enthralled by reading through some of these technical reports that DeepSeek put out, it's a really exciting time. And I think if you're an AI company, then this is a good time to perhaps light a fire under everyone and say, hey, how can we be more creative? I think investors are always far more sensitive to these things than perhaps the industry itself. But on the whole, I think we're going to see far more urgency in releasing products, trying out new features, kind of keeping people engaged, because the more people use this, the more data goes in, the better these models get.
By Monday afternoon, NVIDIA released a statement calling DeepSeek an excellent AI advancement, one that would require a lot of NVIDIA products in the future. Microsoft CEO Satya Nadella also reacted with a post on LinkedIn, saying, as AI gets more efficient and accessible, we will see its use skyrocket, turning it into a commodity we just can't get enough of. So DeepSeek has this edge, the edge being it can do all this a lot cheaper than competitors. Did you expect to see such a strong reaction in the markets, this intense of a reaction?
This intense of a reaction is a huge surprise because the evidence that this AI startup might dethrone the leading AI tech companies isn't completely solid yet. This has just kind of been some early signs that they've gotten traction on the App Store, that they're performing well on benchmarks, and sure that, that this can be built faster and more cheaply. But I think the overall concern that we're clearly seeing, especially going into tech earnings over the next couple weeks is question whether are the billions of dollars that are going into these models that companies have been telling investors it's worth it. We are going to monetize this, and all of this investment will eventually, be fruitful. That's coming into question. And what we're going to see over the next couple of days is wondering what is going on kind of behind the scenes. How is this being monetized? Does it have to be this expensive?
Jackie, there are still a lot of unknowns here, right? What are you going to be watching out for over the next couple weeks?
There's so much excitement that goes into a newcomer really plowing into the space when you have this landscape already really cemented. It's almost this like David and Goliath energy coming in. And I'm going to be looking out for improvements in DeepSeek's app, how it uses this momentum. I'm going to be looking for any reactions from President Trump. ChatGPT didn't exist when President Trump was in office the first time. And I'm curious if this is going to inform how he goes about policy with China in other ways that could have reverberations inside the tech industry and the AI community. Those two worlds, the policy in Washington and the AI community and technology in Silicon Valley, are far more intertwined today than they ever have been.
This is The Big Take from Bloomberg News. I'm Sarah Holder. This episode was produced by Alex Tai. It was edited by Tracy Samuelson and Lynn Duan. It was mixed and sound designed by Alex Sugiura. It was fact-checked by Adriana Tapia. Our senior producer is Naomi Shavin. Our senior editor is Elizabeth Ponso. Our executive producer is Nicole Beamster-Bohr. Sage Bauman is Bloomberg's head of podcasts. If you like this episode, make sure to subscribe and review The Big Take wherever you listen to podcasts. It helps people find the show. Thanks for listening. We'll be back tomorrow.